Hey everyone, welcome back to another trading episode. I am your host Jitsuko Toshiro. Today we'll be talking about Bitcoin and the yearly outlook once again. There's a few things that people are requesting to understand, which is bottoming indication and patterns that you'll see in price action to let you know that the bottom is in. Now let's go ahead and get started. Right now I am looking at Bitcoin on the yearly. One thing that you notice is I am not in logarithmic scale. The reason being is because we're on the yearly time frame. I think that there's enough information here for us to just discuss it without using the logarithmic. I'll tell you when I switch back. Now, if you look here, we have a very bearish red candle. This is a bearish engulfing candle. As you can see here on the last year's, on the year prior, so 2 years ago in 2021, you can see that we wicked down and we basically scam pumped to the top of basically 69,000 and we finished the year at 40. Then we finally saw the follow through last year. What I believe will happen this year is the best way to look at it is with percentages. What I think will happen this year is we start maybe 10% above, head up to 18.5. Then we finally see that follow through all the way down to maybe even the 90,000, and we get that bottom wick formation, and then we head up back up. So that's what's going to happen this year. We go down, we head down to basically negative 30% to 50. So we might have we might have 50 more percent to go down. Then we'll finish the year basically with a green candle up. Maybe this last third of we might take on like 1/3 of the red candle. Now, if we zoom in on the 6 month, what I believe will happen in the first 6 months, which most people don't believe will happen, is that most people are thinking right now we are going to have a relief rally. I don't think so. I mean, the information's mixed. So there's people that I think it's 50-50 sentiment. People are hoping for a relief rally, but the bearish price action in the last 6 months is telling me that we'll actually have some follow through. And until we get a wick like this, I don't think we'll see a push to the upside. We need a wick we need to start bearish before we head higher. If you look at it on the weekly time frame, there are a few things you can look for that will tell you that the bottom is in. What are they? You can ask yourself. Well, number one is you see rounding bottoms, which is the exact opposite of rounding tops. What do I mean by that? So this is the first bear market I've experienced personally, the 2018 one. And what I noticed was we had this rounding bottom. Now, rounding bottoms are basically when people are trying to sell, the sell pressure isn't enough. So people are actually buying at higher prices like here, and then they start buying up here and then up here. So the more you try to sell, the higher it gets, and then you get a relief rally. This relief rally was about 300%. It doesn't mean that you're going to set new all-time highs, which we didn't in this situation, but it tells you that there's a relative bottom. These are the easiest plays that you can make. And then another thing to know is the exact opposite of a rounding bottom is a rounding top. And as you can see here, like on this weekly time frame, you see this rounding top here, then we round here, and then eventually you see the follow through. So those are things to look out for. That was what I've learned from the last bear market. And then any trading structure, no matter what the time frame is, weekly, daily, if you see rounding bottoms, rounding tops, this is what they mean. And then like right here, you can see it rounds up, and then we have another basically rounding up here, and then we went parabolic. So then that's when the logarithmic scale becomes useful, because logarithmic time frame will make this all linear. It will help you see it a little bit better. And so when you go logarithmic, you go exponential, you go logarithmic. Now, there are fake outs. So let me go ahead and explain this really quick. So here I would have actually bought. So if I was just going based off of the rounding bottoms and rounding tops, this would have been a buy for me. The reason being is because I'm seeing people buy up the liquidity here. The one thing that I do know though is that the bear market wasn't over. And so I knew that this was actually a scam pump to a higher move. And then after that, you know, FTX came out and said, oh, by the way, we're insolvent. So the news just happened to follow the candlestick formation. One thing I can tell you guys for sure right here is we don't have a rounding bottom. We have a rounding top. So we might even break out here, test, you know, 17.2, 17.5, but I am not going to buy. Now let's look at the intraday and let's take a look at what's happening here. It's only a matter of time before we actually head lower. So let me explain something that's going on. Right now we're trading in this range, and it's basically the $17,000 top and the 16.5 or 16.4 bottom. So we are range bound. What I think is happening is we're getting these rounding tops. So we're going like this. We're making M patterns. And eventually, if we keep banging on the support here, it won't hold. And then we will retest it and then head to lower lows. So until that happens, we are just range bound. I like to make big swings. So keep in mind, like my big swings are always based off of macro trends. Now you can day trade, make money. You can buy off these 3% moves, but that's not how I like to trade. I like to make moves. I was in this move, this 30% move. I was all over it. So that's what I wait for, because I like to trade less. Now people are asking me, well, how do you know the bottom's in? Let me show you something that is rare, but it could occur. And this is on the 1 month. Bottom is in when you have a wick formation after a sell-off or a rounding bottom. So perfect example here. So this is the natural bear market rounding bottom that I just explained to you guys. But sometimes what you can get is a massive sell-off in basically 1 month or so, and then a huge wick. Look at this wick here. This wick means the bottom is in. And you can see that here as well. So those are two indicators that the bottom is in. You either get a wick and you move up, or you get a rounding bottom and you move up, or like again a wick. Now let me show you an artificial rounding bottom. That wasn't really the bottom, but it happened to work out for the upside. It's actually a combo of both. So we have a wick and we have a rounding bottom on the monthly here. Then we moved up. That's how I knew to buy at that time. Everyone thought that was the start of the bear market, but I knew it wasn't just because of that. Now let's look at where we're at here. Now you can see the opposite on the monthly is you get rounding tops and then the follow through. Now let's look at where we are here. I don't see a rounding bottom and I don't see a rounding top. I just see continuation of a downtrend. Now you can wick up and then come down, that's fine, and I'll sit out. But once we break this support here, which is the old last month's support, I am going all in on a short. And that's basically it. This is how I analyze where we are in the market. We are bearish. We have high interest rates. There's no need to buy anything right now. So if you guys like my videos, please subscribe to my content. I have a Twitter right here, Jitsuko Toshiro. I'm posting on Twitter Blue if you like it. I also have a YouTube channel. If you like me enough, please subscribe to my YouTube channel, like my videos, share it with your loved ones. It's the same tag, Jitsuko Toshiro. And I'm always here for you guys, giving you market updates and telling you my sentiment, how I'm trading. I'm here to educate. If you guys have any questions, let me know. Just tweet at me or message me, and I'm always here for you. I hope you guys like the content. And share it with your loved ones. So thank you. Bye.